So it's the money talk that we've always got, and it's one of the most challenging things that we have to talk about in business, but it's something that's wildly important. So let's talk about financial literacy for employees and how we can help employees understand that a dollar is not a dollar. Hey, it's Scott Beebe with Business on Purpose. Always a delight to have you here on the Business on Purpose podcast, our YouTube channel. Got some exciting news coming up. The Audible version of my book will be coming out here in the next few weeks. Let your business burn. Stop putting out fires. Discover purpose and build a business that matters. It's been in print form since 2000, I believe it was 18 or 19. And now we finally got to the point where it was on my 12-week plan to put that in Audible form, and we've got it out. It'll be coming out soon. Business owners are in a constant state of wondering to what depth they, quote, share the numbers with employees regarding revenues and budgets, profit and loss statements or balance sheets. And a client relayed a story of their administrator going to the mail. This is a couple of years ago, and the administrator came back from the mail with a check for $38,000, to which the administrator looked straight at the owner and said, "Wow, you're really going to be able to do a lot with $38,000. And I thought, oh my gosh, we've got a lot of learning to do. Business ownership is challenging enough and demands continual responsibility around the health and the well-being of employees, budgets, products and services, marketing, sales, customers, clients, etc. It's a game that does not stop. So how can we relay financial information in a way where employees begin to understand and position each employee to see how their work has direct impact on both the top and the bottom financial lines of the business, but more importantly, on the mission of what we're trying to do? First, we've got to have clarity on our numbers ourselves. Owners that wing it with the finances will only scale their confusion. Every business owner must carry a past, a present, and a future perspective regarding the business finances. So the profit and loss statement, the balance sheet, offer a rear-facing or a past-facing perspective of business finance. It's basically a static snapshot of what has been in the business in the past, and in some cases what is today, but usually in the past only. For the present look at finances, each business should have subdivided bank accounts. Think of it as a sort of a Dave Ramsey style cash envelope system, but in digital format for the business. When a dollar enters the business, it's a receivable, that dollar ought to be subdivided into various homes or bank accounts for which the portion of that dollar is earmarked. So a portion to profit, a portion to cost of goods, a portion to operating expense, to tax, and so on. The definitive work on the subdivision of bank accounts has been whimsically written by Mike Michalowicz in his important and fun book, Profit First. So go read that. Supporting the subdivided bank accounts should be a weekly tracking sheet that we call the Level 2 dashboard. Level 1 being the subdivided bank accounts themselves when pulled up on your bank's portal. But those go away over time, so we need another sheet to be able to track that so we can get that snapshot in time to see what's actually going on this week and then historically. So the Level 2 dashboard is simply a weekly snapshot of your subdivided bank accounts for that week so we can watch a historical flow of cash. That's the real cash flow that we like to see. It's actual cash in the bank. We can also add line items for receivables, payables, debts, etc. to help us see what actual cash the business has access to today and historically has had access to. The future look of our business finance will be spelled out in simple budgets and pro formas. The budgets give us a general idea of how much we've allotted for the various systems of the business, and the pro formas educate us on what would happen if we took up a certain decision. So when you have the confidence as a business owner of knowing that you are taking a three-pronged or past, present, future snapshot of the business, then it's time to do some basic financial literacy for your team. There are three principles that would be helpful to communicate along with a fun exercise. So a first of these three principles is this: a dollar is not a dollar. When a dollar comes into the top of the revenue funnel, to our earlier example of the administrator's dismay, not all of that dollar goes to the owner. In fact, the majority of that income goes somewhere else. That leads us to principles 2 and 3. Number 2, a dollar out is always more than a dollar, and a dollar in is always less than a dollar. So as for principle 2, a dollar out is always more than a dollar. I went to a pizza place this last weekend with my family. The pizza was a published price of $20 each, but for some reason, I paid almost $22 each for the pizza. Why? Well, a dollar out is always more than a dollar with taxes, fees, Sometimes some other surprising elements. The price that is published is rarely the price that you pay. $1 out is usually always more than $1. As for principle 3, $1 in is always less than $1. Has there ever been a receivable that's coming into your business where you have been able to retain 100% of that receivable for yourself? Not even an all-cash business can say that. Even an illicit all-cash laundering business must pay some overhead and some employees, some payoffs, cost of goods, etc. $1 in is always less than $1. So it's a fun exercise that we've shared with our clients, and actually I just did one last week with an architecture firm that we coach and their teams. We do this a lot. You take a roll of 100 pennies and a solo cup. You dump the pennies all out into the table and you start working through the percentages of your profit and loss statement in general terms. Or you can use an example company from a similar industry. 35% goes into cost of goods, put 35 pennies in the solo cup. 26% goes to employee payroll, put 26 pennies in the solo cup. Keep doing that until you have just a few pennies left. And then those remaining pennies, you take that to remind the team that we've still not accounted for taxes on the business or mistakes or potential overages. So even if the profit and loss shows a profit, that number is rarely the cash that is actually available to the business. It is not reasonable to assume that your employees understand the basics of business finance. When they hear that your business generated $5 million in revenue last year, there's an assumption that you're a millionaire, when in reality you spent the majority of that money to actually run the business. $1 is not $1, and employees need to hear that message. Make sure to go to mybusinessonpurpose.com/roadmap. We've got an icon there called the Level 2 Dashboard. You can actually click on it and get about a 2 to 3 minute overview of what that looks like. mybusinessonpurpose.com/roadmap.